Stocks perk up, shrugging off tariff fears, with mid-caps leading the charge after the recent slide. Metals and healthcare, they're the big gainers, even as IT drags in trade.
RBI lifts curbs on Kotak Mahindra Bank, onboarding new online and credit customers, drawing positive reaction from analysts. Jay Kotak, co-head of Kotak 811, tells CNBC-TV18 that the development is a big positive and comes on the back of significant efforts by the team.
ICICI Bank says Prudential, its JV partner in the mutual fund arm ICICI Prudential AMC, is looking to sell some stake via the IPO. The bank, however, will not participate in the offer and shall retain its 51% stake.
And JSW Group's Parth Jindal tells CNBC-TV18 that the steel tariffs imposed by US will benefit JSW USA. He also welcomes the entry of EV players like Tesla to India to grow the market.
And small companies appear to have outdone the Goliaths. So while many listed FMCG giants post a 0 to 5% sales volume growth in Q3, market research company Nielsen tells CNBC-TV18 that small and mid-sized companies saw 8 to 10% volume growth, while Amul's Mr. Mehta says that Amul sales grew by 15% in the third quarter. Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Vinny. Well, Vinny, around 90 minutes back, we were on air, and at that point in time, the markets are holding with gains. Guess what? It's only got better from here. And I'll tell you what, we are holding above the 23,200 odd mark, which is very, very important given that today is weekly expiry as well. So the bears will be a little bit nervous as of now. But
I'm also nervous. I don't want to see that red coming in on the screen like yesterday and the last few trading sessions.
Indeed.
But volatility maybe is something that we could see today.
Well, that's right. Volatility. But I'll tell you what, the bears are so overconfident that they don't expect this mark to be breached. And at least as of now, the bulls seem to be having things going for them. And that's why, in fact, we're seeing a bounce. The Nifty Bank actually is seeing some kind of resistance at higher levels. So you'll want the Nifty Bank to participate as well. Because otherwise, in today's trading session, it's doing a relative underperformance as we speak, and IT as it is not really playing its part. So you'll want the Nifty Bank to head towards that 50,000 mark.
Absolutely. We are watching out for the Nifty Bank also 50,000 mark, hoping that, the stakes in the second half of the trading session, maybe we could see a bit more of an up move coming in from Nifty Bank as well. But we also had the mid and small cap that's seeing a bit of an outperformance today coming in today's trading session. Mid cap is up almost more than 1%. We have small cap also managing to hold on to gains of almost 1%. Metals, that's also seeing some bit of a sheen coming in, and 2% uptick more than that is what the Nifty Metal Index is as of now holding on to. And Pharma, yes, that's holding on to good gains as well. While we're talking about Pharma, let's also talk about Suven Pharma, because that is what we're going to be talking about in our special Inside Edge segment today. So Suven Pharma, they reported a good set of numbers this time that came in from the company. In terms of the CDMO business of the company, that saw very strong growth of 101%, and that was leading to the overall growth of the company. Spec Chem business of the company, that saw growth also of 22%, and the recovery is coming back. The signs of recovery is something that is positive. Now, management also spoke about margins, because this time we saw good margin expansion, and what the management is highlighting, that margin guidance is in the mid-30 levels. They expect the margin to be in the top quartile for the industry as well. So this 30% margins is something that will be sustainable. They expect this strong growth overall for the revenue that they've seen of 40% to sustain, because they want to achieve that $1 billion target for the company by 2030. So important to keep maintaining these growth levels. Acquisitions, they said that they are, will continue to look at acquisitions because they want to become a tech-driven CDMO player. And overall, the acquisitions recently that they've made also on the ADC side is something that will give them a further boost going forward. The goals are to fast pace in terms of the stage 2, stage 3 inquiries which they've gotten from CDMOs and convert them to clients. So they're working on that front as well. So positive commentary also is coming from the management. Now, in terms of the stock move in the recent time, what we're seeing is that the stock has seen a decline of around 50-55% from its peak in November 2024. Currently trading at 60 times its FY26 PE, and at the peak PE, that was in November, it was around 80 times. So, still off that peak PE levels, though historical average has always been 43 times. But don't forget that the correction is something also that could maybe support the stock move going forward as well. Okay, on that note, let's also listen into what the management had to say as well.
I think our guidance has been mid-30s margin, and that we will strive to really make sure that we remain in top quartile margins in the industry. We're very proud of what we have accomplished. There's always price pressure, cost pressure, I think, from every angle, but we have to be efficient in our processes, in our resources, in the optimization of our assets to make sure that we deliver the best quartile margin to our investors. Our vision is to become a $1 billion company by 2030, and we are committed to that vision. Now, CDMO and pharma is a little bit of a lumpy business, so as you know, because pharma companies, as they buy based on their demands and all that. So yes, we are committed to an accelerated growth. We have a very detailed plan to accomplish our vision of $1 billion by 2030. And we are focused on making sure that our growth drivers as a tech-driven CDMO CDMO with the focus on ADC, oligo, as well as chemistry, our API plus business, as well as our specialty chemical business continues to grow and then continues to build relationship with customers that are longer lasting and then deliver the results that we have for the $1 billion aspiration.
Well, the other big mover today is Muthoot Finance is buzzing post its Q3 numbers where margins improved, and the gold loan segment has also seen solid growth. Earlier today, we caught up with the company's joint MD, Mr. Alexander George Muthoot. Let's listen in to how he sees business shape up from here on.
We build a lot of operational efficiency into these branch network that we have, because it's a significant branch network, over 7,000 branches. So we have always ensured that the per branch productivity is increased. And this time we are at a record 19.15 crores of gold loan AUM per branch, which was about 14 crores. So we've added almost 5 crores of productivity in this last 9 months itself. So this is a huge operational efficiency that we are building up. On the cost of funds, yes, currently we are about approximately about 9%. We'll remain around that range itself, because, like I said, with the expansion and a lot of work that we're doing on the operational efficiency, we're around 11 to 11.5%. So we'll remain probably at that same segment. So our affordable housing is primarily on the affordable housing segment. We had a little surge in our cost of borrowing. That's the only reason why the PAT has come down a little bit. But we are growing significantly in that area also, because we have a huge set of customers in Muthoot Finance, and we're able to cross-sell to this set of customers also. So we remain focused on the affordable housing finance category.
Okay, and as we wrap up the Growth Code, which is an initiative by Grow and CNBC-TV18, Prashant Nair from CNBC-TV18 sat down with SEBI's whole-time member, Mr. Anant Narayan, to discuss why traders and investors must strike the right balance between risk and return.
In a phase like this, everyone chases returns, right? I mean, that's the number one agenda, absolute returns, how much can you make, etc. But there is also risk involved in the journey of making those returns, which we don't really talk about at all, I mean, very, very little. Your perspective on it, and how important is it to look at risk-adjusted returns in that sense?
You're right. We tend to focus on returns, which is a measurement of where you started from and where you ended at. So the A to B, of just defining those 2 points. The risk element is really how was your journey as you move from A to B? How bumpy was it? How smooth was it? And the reality is it's an independent variable that impacts us. Return is one element, but how your journey was is also crucially important for all of us. Now, you often hear people giving advice that don't worry about the ups and downs. Look at the end points and see you get this annualized 10%, 15% returns from different asset classes. But the practical reality is all of us have a certain risk tolerance. And when you see volatility, when you see big jumps up and down, you do go through an emotional roller coaster.
Absolutely.
And you should have the ability to absorb that. So I think it's crucially important that we start to, as investors, as long-term investors, we start to internalize the concept of risk. We start to measure what is our risk appetite, and it's a very individual number. I cannot answer for you, and you cannot answer for me as to what our respective risk appetite ought to be or should be. It is a unique experience based on where we come from. And once you know what your risk appetite is, you've got to create an investment portfolio that mirrors that risk.
Welcome back to Halftime Report on CNBC TV18. And here's some good news. The numbers are out. CNBC TV18's dominance continues as it knocks out the competition. And on the budget day, India watched Budget 2025 with CNBC TV18. CNBC TV18 is the clear number one with 95.3% viewership during the FM speech. In fact, India chose CNBC TV18 as its budget destination with almost 93% viewership on budget day. Thank you, viewers, for your consistent patronage and trust and continued support. Okay, and that dominance is something that is continuing for years and continued on the budget day, especially during the FM speech. We did have a 95% number, 95.3, Nigel, and India watched CNBC TV18 on budget day, especially during the budget speech. 92.9% on budget day as a whole is what the viewership we got. So thank you so much, viewers, for always supporting us, always watching us and showing us all your love. And thank you so much to the team who's put in so much effort here at CNBC TV18. On air, off air, everyone's working hard.
Well, that's right. Not surprised and thankful to all our viewers for showing faith and sticking with the best coverage, the best market voices. And we appreciate all your support over the years and this one as well. Well, that said, let's get to the markets. And as we said earlier, the 23,200 mark could be a level that the bears want to fight. For the time being, we've come off a little bit from the top. I think we're holding around those levels. Ajit Mishra of Religare Broking joins us on the show. Hi, Ajit. It's been a good bounce back, actually. The question is, have we made a double bottom at around the 22,750 mark? How are you viewing trade?
Yeah, good afternoon, Nigel. So first of all, congratulations to you and your entire team on being a prominent name. And see, yes, we all are seeing this as a sign that it could be a first leg of the rebound. But for reversal or confirmation, we need to wait and see whether this move sustains or not. Because in past also we have had multiple attempts wherein we recovered, we reclaimed major averages, but again, the market resumed the overall down trend. So as of now, I feel that the first hurdle is around 23,350 mark, which is the 20 EMA, then 23,600 would be the major hurdle that once we cross that mark, definitely we'll have a clear sign of reversal in the index.
Sure, Ajit. Good afternoon. This is Vinny joining in the conversation as well. Ajit, let's talk about few sectors also that have underperformed, right? Realty, pharma specifically. These are seeing major pressure coming in, and this is what I'm looking at is in terms of YTD performance also. Charts, technicals for these, are they showing any improvement? What are we seeing here? And anything specific that you were tracking on this front?
Yes. So, Nikki, the only problem is that, when it comes to the rate sensitive, initially when we saw the rebound, most of the rate sensitive, including the reality, was participating. But the way they declined while the others are still holding ground definitely, indicates a problem. And wherein the heavyweights, stocks like DLF, Godrej, Oberoi Realty, they all witness substantial pressure. So I'm not seeing any major sign of relief, at least in the reality pack as of now. But on the other hand, yes, pharma, in fact, in today's session also, we are seeing selective outperformance. And within this space, if you'll see Divi's Lab, which is strongly holding its ground, post numbers also, and the stock is trading at the record highs. I feel that there is a potential of further up move. Then we have stock like Biocon within the pharma space, wherein participant can see for fresh up move.
Okay, Ajit, thank you so much for joining in with us, giving us your insights in terms of the markets as well as a few individual sectors and stocks that you're tracking. Thank you so much for joining in with us this afternoon. On that note, we're actually going to slip into a very short break, but don't go anywhere because after the break, we'll get you more market updates as well as stock-specific action on the other side. Welcome back and thanks for staying tuned into CNBC-TV18. Now let's move on and onto a quick CNBC-TV18 exclusive. Sources tell CNBC-TV18 that IRDAI is meeting with the insurance CEOs under Bima Manthan will start today. Yash is joining you with us to give us more details on this. Yash, what are you picking up here?
Well, that's correct. So, of course, the IRDA chairperson, Debashish Panda, and the regulator starts its two-day meeting with the insurance industry CEOs starting today. Of course, this is under the banner of Bima Mantham. What we've been given to understand from our sources is that the CEOs of the general and the health insurance industry are expected to meet the chairperson on February 13th, and then life insurance CEOs are expected to meet the chairperson on February 14th. As far as agenda for the meeting is concerned, there are certain important points on business, on regulations and upcoming regulations as far as the regulator is concerned. First one, the regulator is expected to take a stock of the 9-month business growth for all health, general and life insurance companies. Second one is that the regulator is expected to take a stock from the non-compliant entities with respect to expenses of management. Remember, the regulator had set a limit on expenses of management. If entities are non-compliant, the regulator is expected to take a stock on by when would they comply with the expenses of management limit. Apart from that, the regulator is also expected to take a stock on the progress of Bima Sugam and the Bima Trinity, which includes Bima Vahak and Bima Vistar. Finally, two things. State insurance plan is also going to be discussed. Insurers were asked to adopt states and drive insurance penetration in those individual states, so the progress with that. And finally, regulator could also discuss the progress as far as the intermediary regulations are concerned before the regulator puts out a consultation paper on the same.
Okay, thanks Yash for that. Well, that'll be interesting once. We'll keep an eye out on that. In fact, there is another important meeting to track today. Sources tell CNBC-TV18 that the Reserve Bank of India has called MD and CEOs of select NBFCs and select industry representatives for a meeting later today. The new RBI governor, Mr. Sanjay Malhotra, will preside over the meeting along with deputy governors and other senior officials as well. Sources add that the objective of the meeting is to seek feedback on various industry issues. So we'll keep an eye out on that front as well. I'll tell you what, let's slip into a short break. When you come back, we'll get chatting with the management of Suprajit Engineering. They reported their set of numbers. How are things shaping up? What's the way ahead? Impact of tariffs? We'll put all those questions to them. Welcome back. Let's focus on another management, that of Suprajit Engineering. As we speak, the stock is at the high point of the day. So let's understand more about how the past quarter was and how are things going ahead. We have with us Mr. Ajit Kumar Rai, the founder and chairman of the company. Hi, Mr. Rai. Good day and good to have you on the show. Well, in the past quarter, there were a couple of one-off, non-recurring expenditure that hit you. Could you quantify that? What was the total one-off and how much of it is non-recurring? Please go ahead.
Good afternoon, and thank you for having me on your channel. I think the one-offs typically have been some, restructuring costs at Matamoros in terms of people, where one of our customers went insolvent in Europe in the quarter, so we had to write off those outstandings. And of course, a few one-offs at our new acquisition, that is, SCS. So the quantum of that, it's a little difficult to say, but I think probably it's about $1 million across various divisions on multiple counts.
Okay, all right. So $1 million approximately. Got that. I wanted to focus on a couple of verticals then. The SED vertical, you were very, very optimistic about that. And you're saying that, we could see hockey stick-like growth out there. However, in the past quarter, it's grown by close to around 20%. So should we be bracing for very strong growth even from here on? If you could give us a sense about that. And also, in this business, it's a smaller part of your business, but the street is quite bullish about it. What is the sustainable margins? Just the SCD business.
You're talking about the electronics division.
Yes. Suprajit, the electronics division.
Yeah. The electronics division last particular quarter has been slightly muted because of the product mix, and particularly there has been a large regrouping of the leaders within the EV space. So that probably had some effect on our overall growth numbers. But what we have said 2 years ago when we started the electronics division is that the first 2 years we'll have a hockey stick kind of a growth, which is what has happened. From nowhere, I think we have come to the current position where every quarter we had 40 to 50% kind of a growth. That 2 year is over. Now I think it would be still very good. I think it will be a strong double-digit growth that we see going forward in the coming quarters and the coming years. And what's interesting is that we are able to get some significant new contracts for new business within India, but also for exports through our own, group companies. So the overall prospect for the group is good. And in terms of the margin, I think what has happened in the quarter is that we have established a second SMT line, and the costs incurring, involved in that and setting it up and have, overseeing that entire line had added to the cost. But I think going forward, after a couple of quarters, we easily see a double-digit margin coming into that business.
All right. So in the next couple of quarters, the Suprajit electronics business gets back to double-digit margins. And in terms of a revenue run rate, it starts doing around 50 crores on a quarterly basis in the coming quarter?
I think we have to give another quarter or two, but I think that is the kind of numbers that we are looking at on a steady state in a couple of quarters. Yeah.
Okay, got it. Let's focus on the debt then on the books, because I don't think you're going to be looking at any further acquisitions. So give us two numbers. One is the SCS business, which you had acquired. It looks like it's in a lot of pain. It's still struggling out there. So two numbers I want. How soon can we see this business turn around? Because you have been taking various measures out there to turn this business around, and it could be a few quarters away. So towards the end of FY26, could we see a turnaround in SCS business? And give us an updated debt number. What is it and where is it headed? Please go ahead, sir.
I think on the debt, our debt has not changed in the last 1 year. I think the mark we had about 600 plus crore of group debt. I think it remains at 600 crore even today. So there's been no new debt. Of course, the interest costs are pretty high, but debt levels have remained same. In terms of SCS, I think I need to clarify to the listeners that SCS Germany has been bought by us from insolvency. So it is already a loss-making company. It had a strategic fit with Morocco as a plant, which is, with the Tangier port being nearby. It had a very significant strategic fit. So there are two parts of the SCS transaction. One is the European side and another one is the China-Canada side. The European side is a loss-making, which is under our fold now, whereas the second one, that is the second tranche, is to be closed by end of the March, which is actually a profitable one. When you look at together, over the next 2-3 quarters, I would certainly think that it would be a cash positive situation.
Okay. So when does it turn around, sir?
That's what I'm saying. In the next 2-3 quarters, once we do both the two transactions together, I expect it to be cash positive.
So in the second half of FY26, SCS could turn around.
Second half, third quarter, probably fourth quarter, yes.
Okay, all right. Now the big burning issue is the debate is about Trump's tariffs. And 50% of your book is exports. And I think you could update me on that number, but I think close to 50% of your exports goes into the United States. He's talking about tariffs. Will that impact your business? Or, do you see some kind of way out with regard to this? Or maybe the products that you are exporting don't come under these tariffs. How do you see things shaping up?
I think as of now, you are right. Suprajit Controls division, which does our outside of India business, has overall business of 50% of the group, of which I would say 50% is in the US. So if there are tariffs in the US for any commodities coming from any country, it will have, if it is from India, if there's a tariff, it will affect us. But I think particularly the starting point was, Mexico and Canada. That tariff threat has been put on hold for some time. please understand, we are not the only auto component supplier supplying to US. There are a large number of guys who are supplying to it. We'll all be affected equally. I think ultimately we'll all be running to the customer and trying to get our compensation. In the process, the product cost will go up, the inflation will go up. So ultimately, we don't know what is the effect of this to the eventual consumers in the US, which could only be detrimental according to us. But we'll all be affected if it is being implemented. And I think we'll all go to the customer for compensation.
Okay, all right. But as a percentage of your total business, total revenues, it's around 25%. Would that be a fair number that goes into the United States?
In the US, maybe 30% is in US. Yeah, correct.
30%. Okay, all right. And also, what about he's sounding quite serious about putting tariffs on China? How does that impact your business?
I think our current plant operations in China, we have one facility. It is for domestic requirements, so it won't be affected. But the SCS acquisition, when it is completed, would be exports to US, but it's interestingly, strategically done through Canada. Customer picks up the product from Canada, so we won't have a tariff issue on that when we finish the acquisition. Yeah.
All right. And for the company on the whole, what kind of revenue growth are you looking at? We spoke about various divisions. Could you tell us on a consolidated basis, what kind of growth are you looking at and consolidated margins? Very quickly, sir.
I think consolidated, we have been doing double digit, including SCS. I think that will continue the double digit growth that we have been projecting all this time. We have talked about 13 to 15% consolidated EBITDA. We just crossed that in this quarter. So I think going forward with the restructuring of SCD, taking a very good show, and for the first time SCD is having a double digit margin. We expect that 13 to 15% EBITDA margins are sustainable going forward on a consolidated basis.
Okay, all right, Mr. Rai. Thanks a lot for joining in. We'll hold you to some of these numbers and the guidance that you've given. For the time being, the street is looking ahead and explains why the stock is currently at the high point of the day. Well, time to slip into a short break. We'll get you excerpts of the conversation we had with Freshworks CEO on the company's performance in Q4, as well as the outlook going ahead.
Welcome back to Halftime Report on CNBC-TV18. Let's move on and talk about Freshworks, a cloud-based software as a service company. In Q4 of calendar 2024, the company reported a beat on revenue and margins, while the profit for the entire year also saw a healthy growth. Reema Tendulkar caught up with the company's CEO, Dennis Woodside, to discuss the company's performance and the business outlook, and began by asking about the concerns around the revenue growth. Listen in.
I think what you saw in the earnings for Q4 is that we're winning in the marketplace because our competitors are offering software that's overpriced and overcomplicated, and our customers are just fed up with that. So they're choosing us over competitors. That led to the 22% growth that you saw in Q4. As far as 25 is concerned, we're excited about the year. But of course, we're going to put a guidance out there for our investors that reflects what we have line of sight to right now, with the intention of going out and beating it.
So your line of sight is for a 13 to 15% kind of revenue growth. How would it compare with the organic growth of last year? What was the organic growth, for instance, in calendar year 2024?
So our growth for both our customer support line of business and our IT line of business has been very strong. We added 2,600 customers in the fourth quarter. You saw the top line growth of 22%. A portion of that was due to an acquisition that we made, Device42, but the vast majority was organic. And look, going into this year, we're excited about AI. We're excited about our opportunity to keep moving up market into larger and larger customers. Not a lot of people know that we have 1/3 of the Formula One teams that use our product today, 1/3 of US Major League Baseball teams. So we've got a lot of momentum in the marketplace that's going to carry through into 2025.
Have you seen the customer sentiment, the demand environment improve in the last 3 or 4 months?
Well, certainly, and you saw that in the case of our net adds. We added 2,600 net new customers, which was our best quarter in 4 years. And one of the things that's driving that growth is AI. AI is central to our growth strategy. I talk to customers all the time, and every customer I speak with wants to talk to us about AI. So demand for that AI product is driving our overall growth for sure, especially among what we call mid-market companies, companies with under 20,000 employees.
So what percentage of your revenues come in from these mid-market companies with employees sub 20,000 count?
Yeah, around 2/3 of our revenue is coming from with a mid-market, from 250 employees to 20,000. And in the US, that segment accounts for about $10 trillion in GDP.
I know majority of your revenues come in from North America and the European clients. But what is the contribution of India, and who would be the key clients? And is this a growth area for you?
So India is super important for us. We have prioritized 8 countries around the world for our direct sales effort, our field sales, and that's the team that's really taking us up market. You know, in India, we have companies like Paytm and PhonePe, big companies with big consumer bases relying on our customer support software. And we see India as an opportunity for us to continue to move up market and continue to develop our business.
There are no more layoffs at Freshworks.
There are no, we have none planned, absolutely.
Welcome back to Halftime Report on CNBC-TV18. Now moving on, day 3 of India Energy Week is underway in New Delhi with over 120 nations participating in the 4-day event. My colleague Manisha Gupta caught up with Amrita Sen of Energy Aspects and started by asking about her views on crude oil prices and oversupply. Let's listen in.
I think the going forward bit, let's define it, right? This year, next year, the reality is OPEC still has spare capacity. Yep. So if there were to be an outage, there will be enough oil to balance the markets. I agree that's been the vibe that, look, there's no shortage. Having said that, there's ample worries about Iranian and Russian sanctions. Should they kind of get enforced, that could really be a lot of kind of bad news for refiners here who are already struggling with the higher price of heavy crude oil, right? But I'm talking more towards the end of this decade. I think that's when you'll really start to see the tightening, especially if then US production growth is flatlining.
The other thing is about tariffs as well, and you mentioned that. And while it may not have a direct impact, but indirect, yes, because it impacts global economy, it does impact demand going at the end of the day. And we haven't seen China recover as much as we would have wanted it to.
For sure. I was in China at the start of the year. Definitely a lot better than last year. Last year was really, really horrible in terms of demand. But like you said, and I don't think it will really ever go back to the heydays of China. The economy is different now, which has a huge implication for global growth, right? Oil demand growth on average used to be 1.2 to 1.4 million barrels per day. Today, with this China, it's more like 800, 900,000 barrels per day, right? Then tariffs pose a massive downside risk. The tariff threats to Canada and Mexico is probably more a negotiating tool that we see from Trump, because he does want to renegotiate kind of NAFTA effectively. But those to China, he's very serious about. My worry about tariffs more globally is that Trump and his team believe that tariffs are a very good source of income for the government so that they can do tax cuts. And that's where my fear is, even for India, that does he just do a universal tariff of 10% or whatever that number is? I'm hoping with Prime Minister Modi there today, I think maybe there are some deals. I mean, ultimately it's all about deals, right? Maybe India buys some more LNG, maybe some, tech/military equipment, and then there are no tariffs. But I think that's the challenge, is that if you view tariffs as something that you can gain revenue from, the urge will be to put tariffs on all your trading partners.
What is your sense then on the crude oil prices from here? I know there are a lot of ifs and buts, and I'm assuming it's going to be a more quarterly phenomena telling where the crude prices are headed.
I think so. I think even, sometimes one of the things I'll say, we work with 600-700 companies globally. The biggest trend I'm seeing right now is people are just saying, given the volume of uncertainty, we don't even want to trade crude right now. They're doing much more through the options market rather than futures market, because you just don't know. Trump might wake up talking about tariffs and end the day talking about sanctions, right? It's a very wide spectrum. In terms of our price forecast, we've had a counter consensus view for this year. We've kind of said prices will be around these levels, like around $80 for Brent, between 75 and 80. I know a lot of people were talking about $60 oil and so on. We've kind of stuck to our guns by talking about A, OPEC will manage this market, and B, sanctions are coming. But like you said, I think monthly and I think quarterly is going to be the key focus. First half might actually be tighter because of sanctions. Second half, if you get workarounds, can actually be looser.
What's your sense on Indian markets then? And you've been having conversations with a lot of Indian refiners. We've seen guidance being cut for 2025, but you said exploration is something that Indian companies are looking at.
Yeah, I was just on a panel with ONGC and Oil India. They were definitely very optimistic. But I would say as much about international prospects as about the domestic prospect. I think India's basins are challenging, for sure. The government's doing a good job in kind of opening it up. I think that you will start to see production kind of picking up a little bit more. And we've had some success stories, for sure. But this is, you're still 600,000-700,000 barrels per day numbers talking about, rather than millions of barrels per day. I think the question is, where does India partner with, right? Latin America, Africa, we've seen more there. Do we see India going into Russia, for instance, right? There is definitely prospects there. I think those are more interesting stories for the upstream. Downstream, all the refiners very focused on Russia sanctions, and again, price of heavy crude oil and fuel oil, that's getting very expensive. All the Indian refiners are geared towards running those crudes. So unfortunately for profitability, that's a hit for them, right? I think that's been the story of all my conversations here.
A final question then. And would you say India is finally getting a proper mix now? Because from crude oil and more gas, and now LNG seems to be a big story globally as well. And then we're looking at biofuels. There was a hydrogen bus down there. Yes. There is also nuclear conversations around. So what is your take?
Yeah, I was fascinated because I was moderating Minister Puri's panel yesterday, and he mentioned nuclear. I was like, wow, that's interesting. Of course, there are still restrictions, right, how much nuclear India can do. I would say India's biggest success story has been ethanol, right, if you look at the biofuel story. And rightly so, because we are a very rich agricultural country, so that makes a lot of sense. I'm still a little bit skeptical on green hydrogen. The costs are still very high. And ultimately, hydrogen is gas, right? That means you need to import even more gas. So I don't think that's as simple. I do think the ethanol or the biofuel story, the biogas story is going to be very, very big in India. And nuclear, look, I think if you're serious about energy transition, you have to be serious about nuclear. I understand it's a very complicated topic. But yeah, I think even solar, and I think you're going to see a lot of solar kind of investments here as well.
Okay, and with that, it's a wrap on this edition of Halftime Report on CNBC TV18. Thank you so much for tuning in. Up next, we have Business Lunch, and Nigel will take your leave, and I will come back with Business Lunch.